Hey everyone, this is a trader investor. I want to talk some more about liquidity and how not to get caught on the wrong side of liquidity. And the wrong side of liquidity is actually both sides. So I will explain what I mean. If you have seen some of my videos recently about demand zone, supply zone, order blocks, and forex precision entry, I talk a lot about liquidity. And liquidity is an area where a lot of retail investors are likely to get in, have some stops where institutions, smart money can come hunt those stops to take the market in the direction that the institutions wants to take it. So let's take a IWM as a good example here because we're seeing that action right now. The reason why we're seeing that action is we have here on this day, here yesterday, the lows of yesterday, we started to make a support line. So price kept bouncing. And today I wanted to go get a put position. I wanted to go on the short side, but I knew this was a headwind. I knew there was some possibility where retailers will come in and take the price back up for a while before price collapses. But for that to happen, where I saw a problem with liquidity, and let's mark this area here, liquidity here. This is liquidity. So what is going to happen is a lot of retailers, when price came down here, they would buy with anticipation that price would reverse. It could do that, but before that happens, look where that liquidity got taken care of. You see all this area here. All this area is where that liquidity got taken care of. And price came down to last week's lows. That's how far down price came down. So those liquidities got taken care of. There's the second set of liquidity, which I've always said liquidity is on both sides, not just on one side. So the first side we took care of. The second side of liquidity is taken care of because a lot of people who saw a breakdown of this structure, seemingly a breakdown, they went short. So they went short here with anticipation price is going to continue to go down. They might have gone short at the low of this bar. They might have gone short at the break of the weekly low, but price immediately reversed and took care of this liquidity. So now liquidity is taken care of on both sides. So now price can do what it needs to do. And here's my expectation for price. We have made a series of lower highs. We're making a series of lower highs. And right now I am going to enter a put position at the break of this line because I know there's no more liquidity here. Liquidity is taken care of, so it's all those stops are hunted, and now at the break of this line I am going to buy a put position, and I will come back at a later time, today or tomorrow, to show you how that analysis turned out to be. But the main purpose is how not to get caught in a liquidity area and not get caught on the wrong side. And which one is the wrong side? Both sides are the wrong side because both sides are going to get taken care of prior to price doing what it needs to do. Institutions are most likely driving this price down. They're continuing to drive this price down, and at least for the short term we're going to see some of that happen. And part of my overall thinking, I'll go to SPY for just a minute to explain why I'm thinking that way. If you look at SPY, the SPY is making a series of higher highs while the oscillator is making a series of lower highs. So as a result, I see a big divergence, and I see SPY is about to roll over. I never predict how deep this rollover is. I just know it's a rollover. So when the broader market is having a rollover, IWM is actually leading that effort. And so right about now, over the next few minutes, this is going to break, and I'm going to enter my short position, at least to hedge and or take advantage of this strong movement to the downside. IWM has been moving down, as I mentioned, making lower highs, lower highs, lower highs, lower highs. With those lower highs comes lower lows, of course. That's the obvious one. If we're not in a range, I don't want to be in a range. Lows, lower lows, and lower lows. And the 15-minute range for today is broken to the downside. And the rule is, as long as VWAP is below the midline, as long as price is below VWAP, that's my entry. So I'm expecting those conditions to be met. We broke out, we retested, we are now going back to the downside, and I just want to enter a little bit early. I don't want to wait until these lows are broken again. I want to take advantage of this down move. I think that's a pretty safe assumption that price is going down, liquidity has been fulfilled, so now I can enter with more certainty, and my stops being these highs. So if these highs are breached, I was wrong in my analysis and I'm out. So right now I'm entering a put position, so I'm just going to stop this video so I can execute my position. Take care, everyone.